Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we bring you the latest news and insights on the cryptocurrency market. Today, we're going to explore a story that's got investors sitting up and taking notice. Coinbase, one of the largest cryptocurrency exchanges in the world, is sounding the alarm on a major risk with their Bitcoin Treasury model. So, what's going on? Essentially, Coinbase has been holding a significant amount of Bitcoin in cash reserves, waiting for prices to drop so they can buy more. Now, this strategy makes sense when there's bearish sentiment and prices are low. However, if the trend continues and prices rise instead, it could be disastrous for investors. We've got some data to share with you that illustrates just how high Coinbase's cash reserves are and what a risk it poses to their treasury model. According to recent filings, Coinbase is holding over $104 million in cash, more than 10% of their total assets under management. Now, this might not seem like a lot compared to the overall size of the market, but when you consider that's nearly as much as some companies spend on annual profits, it raises some serious red flags. For example, if Bitcoin prices were to skyrocket, Coinbase would be left with millions of dollars in cash that they could no longer use to buy more. This could lead to a very interesting situation, where the company is essentially stuck holding onto worthless assets while investors outside are making fortunes on the rise in crypto. But what's really concerning here is that this risk isn't just about Coinbase's own financial health. It also reflects broader issues with how Bitcoin and other cryptocurrencies are valued. If prices continue to fluctuate wildly, we could see more and more companies adopting similar treasury models, hoping to time their purchases perfectly and reap the benefits when the market rebounds. This isn't a new problem. In fact, it's been a concern for investors and financial analysts for some time now. But what Coinbase's recent move highlights is that this risk is no longer just theoretical. It's real. And with the rise of crypto trading, it's more likely than ever that we'll see more companies adopting these high-risk treasury models. So, what does this mean for Bitcoin and the wider cryptocurrency market? For now, it's a bit of a mixed bag. On the one hand, if Coinbase is indeed holding onto too much cash due to their own risk aversion, this could potentially lead to further selling pressure, which in turn could push prices down. On the other hand, if investors start to take notice and begin selling off their positions, we might see a sharp increase in prices. As always, it's impossible to predict with certainty what will happen next, but one thing is for sure. Coinbase's recent move has certainly made things more interesting in the world of crypto. Thanks for watching Bitcoin Bulletin. We'll keep an eye on this story and bring you updates as more information becomes available.